Hey everyone, welcome back to my channel. My name is Cara Fiano and I'm a local real estate broker here in the Asheville region with Mackey Realty. Today's video is my July housing market update video, and this one is going to be focused more on national data as well as some mortgage news. Next week's video will feature all of the local statistics as well as some local news, so if you are not already, definitely hit that subscribe button down below and hit the bell so that you are notified when that video comes out. I know I got a decent amount of comments on my June housing market update video, and many of you said that you liked this style better where I'm going to be sharing my screen. I'm not totally sure what I think about it yet personally. I know that the video quality isn't as good when I share my screen because I'm filming through the computer instead of through my camera, so let me know what you guys think of that. I'm not sure if you even care about that sort of aspect of this video, seeing as it's more about the statistics than it is the video quality. But let me know what you think. I can always switch back. So, as I said, I'm going to be focusing on national data today, going to be talking about home prices, inventory, and then ending off with some mortgage news. So let's dive right in. All right, so the first statistic is going to be around median sale prices on a national level. So the median sale price did increase to $400,000, which is a 1% increase year over year. As you can see, prices are continuing to appreciate just at a slower pace. The next chart is about the percentage of properties that sold above list price. If you were in the housing market a few years ago, basically 2021, 2022, you know that a lot of times properties were selling at or above list price with multiple offers. So a question that I know a bunch of people have had is, are properties still selling over asking now that we are not really in a strong seller's market, or in some cases not in a seller's market at all? So as you can see from this chart, percentage of properties that sold above list price has been declining, but it is cyclical. So this year, I would say since April, although you could argue since January, this percentage has been increasing. If we look back over the past few years, we can see that January 2023, January 2024 is pretty much when this percentage bottomed, and then it did spike, or you could say peaked, I would say, in July 2023 and 2024 roughly. So this makes sense because spring and summer do tend to be the busier times for real estate, so it makes sense that there would be more properties selling over list price during that time. To go into this a little bit further, I do have some notes on my phone, that's why I'm looking over here. So in May of 2025, 28% of homes sold above their list price, which was up from 18% in April, but down slightly from 30% in May of 2024. We are seeing this kind of descending trend where fewer properties are selling above their list price, but there are still some. Another statistic I think is worth mentioning and really ties in with this is price appreciation. So according to the Case-Shiller Index, annual home price growth has dropped to 2.7%, which is its lowest reading since mid-2023. Now, notice here I didn't say negative 2.7%. It's still positive, it's just less price appreciation. I think this is a point where some people get a little bit confused because they'll see list prices drop and they'll equate that to basically home prices dropping, but that's not necessarily the case. As you could see with the statistic, home prices are still increasing just at a slower pace, as I mentioned earlier. And I think it's important to talk about what they're going to do from here on out, or at least the most likely scenario. So let's go to the next chart here. So this chart is going to show home price appreciation, basically what Fannie Mae and the MBA are expecting. So you can see here, Fannie Mae expects price appreciation to be around 4.1% by the end of this year, and the MBA, or Mortgage Bankers Association, expects 1.3%. By the end of next year, Fannie Mae is saying 2%, and the MBA is saying 0.3%. So basically between now and the end of next year, they are both expecting positive price appreciation, just basically slowing down to pretty much be neutral by the end of next year, I would say, especially with that MBA number. I think this is a good thing to keep in mind, especially if you are a seller. I know a few different people that have contemplated selling their properties, but they're just not too sure when they should do it, because right now it is truly not as strong of a seller's market as we had seen in years past. And they're wondering, well, if I wait a little bit, maybe if I wait 6 months or maybe a year, maybe I'll have better luck. And I wish that I could tell you with certainty whether it would be better to list now or later. Really, I would say base it more on your personal needs than trying to time the market. Trying to time the market, whether you're a buyer or a seller, oftentimes just does not work. So, by looking at this chart, by looking at what the economists are expecting, I could say, well, it looks like your home will continue to appreciate, but as we know, anything can happen. It's really hard to say what next year will truly look like. I think it's important to mention here as well that if you're a buyer and you are trying to time the market, I don't recommend that, because time in the market is so much more valuable than trying to time the market. Because I have heard from many different people who have been sitting on the sidelines saying, well, I've noticed sellers are starting to drop their prices. Maybe home prices are actually going to drop in the next few months or maybe next year. I'm just going to hold off. I'm going to wait, see what happens, and then I'll try and get in the market and buy a property. But the thing is, there's a lot of people who are doing that exact same thing. And I think we could end up in a similar situation to a few years ago. I don't necessarily think we're going to see as strong of a market as that, because with COVID, where interest rates dropped into the 2s, that was really not normal. That was kind of an anomaly. So I wouldn't expect that. However, if the Fed does drop rates, and we'll go into this a little bit later when I dive into mortgage news, if the Fed does drop rates this September or, at some point next year, and interest rates follow that path and drop too, we could see more buyers come on the market, more competition, and basically it could help keep home prices up, or it could even push them up a little bit further. Right now in the market, what I'm seeing is basically buyers have more say and more negotiating power than I have seen in a very long time. Sellers are more negotiable on list price, more negotiable with seller concessions, repairs, etc. And what I would tell you is, if you're sitting on the sidelines and you're hoping for a better opportunity, I don't really think you're going to get one. I know that might be a little bit of a bold statement. Yes, interest rates could come down. Yes, we could have some, economic situation that's unforeseen that causes the market to go lower. I, of course, cannot predict that. However, now is a better time to buy than I've seen in a while. And if interest rates are something that's holding you back, a tip that I've shared in past videos that I think is worth mentioning again here is you can get seller concessions. You can try and negotiate seller concessions and use those to buy down your interest rate, which will lower your monthly payment. I understand that affordability is not great right now. And so basically lowering your interest rate in any way possible will certainly help to make the property more affordable for you. And using concessions to buy down your rate is going to be a better long-term decision than trying to lower the purchase price, because it's going to help your monthly payment. So that's just a little tip for you if you are a prospective buyer. And if you want to talk more about your specific situation, or if you have questions on, why now is a better time to buy, if I didn't really explain that well, feel free to comment down below or reach out to me and I'll be happy to go over that with you. But let's dive into a few more statistics here. NAR's data shows that qualifying income needed to buy a home increased to $108,192 in May. This is the highest income required since July 2024, when it was only a few $100s higher. Median family income is only $105,204, meaning it does fall short of that required income. Of course, this is a national statistic and it will vary based on where you're living. All right, so let's dive now into inventory. I have a bunch of data to share on this, so let's go to the next chart. All right, so we've got active listings. So the number of actively listed homes rose by 28.9% year over year. This is the 20th consecutive month of year over year inventory gains. You're probably noticing a trend like you were in the other charts where in the winter months, inventory tends to be lower, and in the summer, it tends to be a bit higher. I know there are a lot of lines on this chart, so let's try to break this down a little bit. So 2025 is here in the brown line, 2024 is here, which is the pink line, then we have 2023, 2022, 2021. So as you could see, basically all of the lines that are below 2025 had lower inventory. That makes sense. 2020 was a very unusual year because of COVID, and basically the three that are above 2025 are 2019, 2018, and 2017. So on a month over month level, we are not quite to where we were pre-pandemic, but we are over 2020 levels and basically every year between now and 2020, which is positive. And this does seem to be a steeper line, even compared to last year. That's definitely good if you are a buyer. There are more options on the market right now than we have seen for the past few years, which is great. The next chart, this one shows total listing count. So this one is similar. The other one was just active listings. This one also includes active and under contract properties. So the number of total listings has increased by 20% year over year, which is maintaining a 19-month streak. So again, similar story here. You could see we have a higher total listing count than we've had over the past 5 years, but we are not yet to those pre-pandemic summer levels. However, we are above pre-pandemic winter levels. So there's something to be said for that. And this is a pretty steep line, so that is positive again if you are a buyer. All right, next chart is talking about median days on market. So if you are a prospective buyer, or even if you are someone that's trying to sell your property right now, you might be thinking, what is going on? My home is still sitting on the market. It's been a week, maybe 2 weeks, and we don't really have much interest. Well, the market has changed quite a bit, and homes are sitting on the market for longer. You can again notice this cyclical trend here. So this one's kind of inverse of that chart that I showed you earlier. It was the percentage of properties that sell over list price. So this one you could see we peak in January, and the low point tends to be spring, summer timeframe. Median days on market is increasing. You know, we do have this upwards trending line, but I'm thinking this is probably going to bottom out and then head in the other direction if the past years are an indication of a pattern, which they likely are. The homes that sold in May of 2025 spent a median of 27 days on the market, which is down from 29 days in April, but it is higher than 24 days that we saw in May of last year. I want to talk a little bit now about the number of home sales. So according to the US Census, sales of new single-family homes dropped 13.7% in May compared to April, and supply is now at a 3-year high. This is likely due to interest rates staying where they are. Month supply of inventory for new homes in particular is now at 9.8, which is up from 8.4 last May. It's good to note here that new homes do tend to sit on the market a little bit longer, like new construction properties. I do think it's worth noting that the number of sales has dropped. I'm honestly not terribly surprised. I've noticed this in the local market. Basically, sales last year and sales this year have been very low, and they're expected to increase next year, hopefully, but this year and last year have overall been quite slow for the number of sales. So I just talked about month supply of inventory when we're talking about new homes, but this shows you month supply with basically all homes. So nationally, this number is 4. So on a national level, we are still in a seller's market. I know that that might surprise some of you. You might be thinking, there's no way that nationally we're in a seller's market. And that's because it varies so drastically from region to region. I know that the South tends to be more of a buyer's market right now, whereas the Northeast, for whatever reason, is still in a strong seller's market. So I'm thinking that's the Northeast that's really basically propping this number at, or you could say keeping it down, actually, at that 4 number. So this, again, I think is worth kind of noticing those cyclical patterns. So we could see that month supply tends to peak in that winter time frame and then flatten out in spring and summer. This next chart talks about delistings, which I think is interesting. This is something that I've never talked about on this channel before, but this is a very interesting statistic. This says, today's homeowners are sitting on record high levels of home equity, and more sellers are deciding to take their homes off the market if they don't get their desired list price. Since April of 2024, every month has seen a positive year-over-year increase in delistings. Delistings are up 35% year-to-date and 47% year-over-year. So you can see here, yeah, year over year, that's this red line. Delistings are certainly increasing. And I just find it so interesting that sellers are choosing to delist their properties and basically wait until the market turns in their favor. But I don't know that that's going to work out. We are really in a neutral market, at least locally. As I just showed you, we're more in a seller's market nationally. But I'm not sure that we're going to get into that really strong seller's market that we saw unless we see interest rates drop quite a lot. But from what I'm hearing with the Fed's plans, I don't really think that's going to happen. If someone is selling because they want to be closer to family, or they, got a new job or something, then they have some motive to sell that's outside of just monetary reasons. But maybe the sellers that are just testing the market, seeing what they can get, maybe those are the ones that are basically part of the statistic with more delistings. I'm not totally sure, but I am surprised that delistings are up. So another point to note with this is, to put this in perspective, active listings through May 2025 were up 28.4% year to date and 31.5% year over year. Now, if we compare these statistics to the ones I mentioned earlier, this will show you that delisting growth is now outpacing inventory gains. In other words, it's a good idea to look at all of these statistics from a broader perspective. If we just hone in on total inventory and we could see, hey, total inventory is increasing, that's great. And that is a good thing if you are a prospective buyer. But if we zoom out and we look at some other statistics that are related to this, and we see that delistings are actually at a higher percentage than inventory increases, then we can see that, in a sense, inventory is actually decreasing just by comparing that ratio. So anyways, hopefully that makes sense. But I wish I had this statistic for local, like North Carolina at least, or like the WNC region. I'll look and see if I can find something like that, but I don't think there is any statistic that I can find for that. So let's dive now into mortgage news, which is the last topic of discussion for today's video. So mortgage rates right now are hovering around 6.8%. As you can see, they haven't done a whole lot this year. I'm looking here at this blue line, which is the 30-year fixed rate mortgage percentage for a conforming loan. That's going to be the most common one. And yeah, it's really just hovered around this 6.8 number. We did drop a little bit to I think it was 6.6-ish or 6.67. And we peaked, here around 6.9 on average. Basically, we're just hovering around 6.8%. In terms of what rates are going to do going forward, Fannie Mae is predicting that interest rates will be around 6.5% by the end of this year. The MBA is saying 6.7. By the end of next year, Fannie Mae is saying 6.1, and the MBA is saying 6.4. So these numbers are adjusted. I think it was in June where I mentioned that I think it was Fannie Mae was thinking mortgage rates would be in the fives next year, but they're no longer thinking that that is the case. I could come to you in August's video and say, hey, they're now thinking they'll be 5.5 next year. In terms of Fed rate cuts, they're talking about maybe one in September, but probably won't be anything too significant. I'm not really expecting mortgage rates to change much throughout this year. So again, let me know if you guys enjoy this style of video. Would you like me to go back to the original, like sit down with just the charts popping up on the screen, or do you like me sharing my screen? I might try it like this for a while and we'll see. We'll just see. But let me know if you guys have an opinion, because I want you guys to enjoy this content. So yeah, that's about everything. If you guys have any questions, or if you'd like a copy of my free homebuyer guide or a free comparative market analysis done on your property, feel free to reach out to me. I'm more than happy to meet with you. We can go grab a coffee or a tea and chat about the housing market or anything else. So hope that you guys enjoyed this one. Don't forget to hit that like button, comment down below what your favorite statistic was, and I will see you guys very soon in the next one.